4 months ago, if you would have looked at any YouTube commentary or if you would have spoken with any financial analyst and would have asked them about your view that, hey, what do you think about ITC? They would have said that, hey, go buy this stock. It's a wonderful stock. It will give you massive returns and you will become extremely, extremely rich. Right? This is the commentary. I'm not kidding. Just literally go and check the videos that were published 3, 4, 5 months ago about ITC. Every single finance YouTuber and every single analyst was proposing that, hey, go buy ITC, right? Because it's a good company. There are a lot of good things with it. And I don't say that these people were wrong, right? But now, right? So now, if you actually go and ask anyone about ITC, what will they say? Almost everyone has changed their tune. They will say that, you know what, we don't know what will happen with ITC. The stock just does not move. And they give you 10 reasons why the stock is not moving, that, you know what, too much dependence on cigarette business, this, that, and all the world analysis is done on that, right? I'll tell you the real reason why ITC stock is not moving in very simple 5-step process. That's point 1. Number 2, this is a very good exercise for you to understand about fundamental analysis of stocks, right? That even when all the data tells you that a stock is really, really good, sometimes it just does not move, not because of the stock's fault, but because of the supply demand forces, right? So this is an excellent case study, an excellent case exercise. I myself am invested in ITC and I'm proud to say that I'm invested in ITC. There is nothing wrong with the stock. So let's start this analysis. I'll explain in 5 simple points why the ITC stock is not moving, the real reason behind it. So please watch this video till the very end. I'm going to show you a massive trick of making a lot of money in the ITC stock. But you will only understand it if you stay on this video till the very end. And thanks to our sponsor, Tickertape. I love the product. I have said it multiple times. I myself use Tickertape to do fundamental analysis. So please check the link in the description box. So the first point that you need to decipher is that, is ITC a good stock? Okay, that's it. That's a simple first point that we will uncover. So is ITC a good stock? So let me just quickly look at the financials of ITC and let me try to tell you some of the key points that I observe. So first and foremost, so the total revenues has generally been growing, right? It has generally grown, or at worst case scenario, you can say that, hey, it has been stable, right? Same goes for net income, that it has generally been growing or it's somewhat stable, right? So it is fairly a stable company, right? At least from a core financials perspective. Now let's also very quickly take a look at one more interesting point here, which is about the cash flows, right? Because ITC is a company that generates massive cash flows. It's generating 10,000 crores, 12,000 crores. Like, this cash flow is like insane. It's making insane cash flows. Now you might ask me that, hey Akshat, what is the significance of cash flows, right? I mean, why are cash flows so important? Cash flows means that the company is actually getting money in the bank account, right? Simply put. So they have money in the bank account. They just don't know what to do with it. So what does ITC do? So ITC pays dividends. Right? I'll cover one of this point separately, but the point to be noted is that ITC pays massive dividends. Now, why is the dividend growth such a massive thing? So essentially what happens is that if you're looking at any stock, for example, ITC, you as an investor will make money in 2 ways. Either this value, this 206 that you're saying, it goes up and you sell it, right? So let's say that it becomes 210, right? Then you're selling the stock at approximately 4 rupee profit. Right? The other way, the second way, is that the company pays your dividend in a timely manner. So ITC pays massive dividends. The dividends are so massive that if you actually go and put your money in a fixed deposit, vis-a-vis, if you go and put your money in ITC stock, the chances are that you will make more money from the ITC stock, right? Just via dividends. Forget about this appreciation, this happens there. Right? So the point that I'm trying to tell you is that the company's balance sheet is so strong that it is making so much money, it does not even know what to do with it. So it just takes that money, passes it on to the investor and tell them that, hey, you know what, just go and invest your own money, right? We don't know what to do with all this positive cash flow that is coming to us. So I'll cover this point in detail, but the first key takeaway from point number 1 is that from a financial balance sheet point of view, there is nothing, absolutely nothing wrong with ITC. Now the second question that you need to ask yourself is that, hey, is ITC trading at the right price, or is the valuation of the company correct, right? Is the valuation sensible? Now let me just tell you, like in less than a minute, how the valuation of any company happens. So valuation, I have explained it earlier, and please do tell me the name of this model. I'll not tell you. I'll ask you to comment it. So the valuation happens this way, right? So we are looking at ITC. Now ITC has multiple business lines. So it has cigarettes, it has hotels, it has, FMCG, and it has bunch of other business lines. Now every business will generate certain cash flow every year, right? So let's say that in year 1, the cigarette business generated, let's say 100 crores, right? In year 2, it generated 200 crores. Year 3, it generated 300 crores, right? Hypothetically speaking. Now, what we do is that we discount this cash flow back to the present time, right? With a certain discount rate, right? This is called as, you tell me what this model is called as, right? I will just give you the acronym. It is called as PV of FCF, right? So tell me what is the meaning of PV of FCF is in the comment box. So I will also understand that you're getting something useful out of the video. So essentially you are discounting back all this cash flow back to the present time with a certain discount rate. Now discount rate is a very simple philosophy, right? For example, I usually say that, Akshat as an investor can grow his money at 15%. I'm able to do it. I've been doing it for years. So I'm confident that I'll grow it at 15%. So my discount rate becomes what? 15%. But you as an investor, you might say that, Akshat, you know what? I'm a very risk-free type of a person. I just put my money in an FD. So what is your discount rate? Approximately 6%, right? So every company will have its own discount rate. So they will discount it back and this will give you PV of FCF. So tell me what PV of FCF means. So this gives you the total cash flows in present terms from one business line, right? Similarly, you do this exercise for all the business lines and ultimately it leads to a valuation. That is how the total market cap of the company is calculated. So I hope this concept is clear. Now, is the valuation fair, right, for ITC? Is the valuation fair? The short answer is yes. Okay, the valuation right now is fair. Now, why do I say it? Again, now valuations depend on a lot of things, right? Now, it's not a very easy thing because it's like determining a market price for your house, right? You might be living in, let's say, Lodhi Road in Delhi, right? You have a bungalow there. You talk to your neighbors. Everyone is very happy that, hey, this bungalow is 10 crores, right? Because all my neighbors are telling me that this bungalow is 10 crores. Therefore, I also assume that this bungalow is 10 crores. But when you go in the market and try to sell it, that you're only getting 5 crores. That's the maximum price you're able to get out of it. So what is the true value of this house, right? So it's very difficult to ascertain. So the valuation of the company really depends on the analyst and the valuation can keep on changing, right? Now the valuation depends on growth projections, right? This is the reason why I was explaining you so much stuff, that you need to understand that how the individual business lines for ITC will change, right? What is the growth rate of these different business lines? Will the FMCG business grow at 5%? That will increase more cash flows and impact the valuation, or will it grow at 10%, 15%? That will change the valuation massively. So please remember that the valuation of a company changes massively depending on the growth rate projections of different businesses of that firm. So I hope this point is clear. So very two key important points from the first key section. Number one, is ITC a bad stock? The answer is absolutely no. It has stable revenues, massive cash flows are there. So all good things, right? The second point, are the valuations high? I will show you in a minute. The valuations are not high. The valuations seem to be fair, right? At 206, 205 levels, it seems like a decent stock to buy. So this brings us to point number 2. And your point number 2 would be that, hey Akshat, you know what? You said like such wonderful things about ITC. Then genius, tell me, why is the ITC stock not moving, right? That is the reason why we clicked on this video. Okay, so it has been trading in this range, right? This 200-ish range since almost a year now, right? And it has hardly ever moved. The cash flows were positive then also. The revenues were growing then also. So why is it that the ITC stock is not moving? So there are two things that I would like to tell you here, right? And then I'll explain you in context of ITC, but very two quick economics related points, right? Now the price of a commodity, as I was telling you, it depends on what? It depends on the intersection of demand and supply, right? So this determines the price. So demand curve is downward sloping and supply curve is upward sloping, right? So if there is enough demand in the market for ITC stock and the supply is less than the demand, then the stock will keep on going up, right? On the flip side, if the supply is more than the demand, then the stock price will come down, right? Now you might have heard of the word operators. They can manipulate the stock for a long time. This stock price that you're seeing, it goes up if the demand is higher than supply, and it goes down if the supply is higher than the demand. That is the simple equation. This has got nothing, absolutely nothing to do with the fundamentals of the stock, right? This is a concept which is so basic and no finance YouTubers teach it, but the demand and supply of the stock is not dependent on the fundamentals of the stock at all, right? If you like this point, please press the like button. It would indicate to me that you would like me to teach stock market in conjunction with finance, economics, and with everything going around. So back to this discussion. So number one, price is determined by the supply and demand equation. It is not determined by the fundamentals. Fundamentals of the stocks are already good, right? There is nothing wrong with the fundamentals of the stock. That's one. The second point is that why does the demand of a stock go up, right? This is an important point that you need to keep in mind. So I was talking about something called as growth rate, right? Growth rate of different verticals, right? Now, if a company is growing, then people are going to bet on its growth, right? You might have heard of 90s .com bubble. Companies were making loss, right? There are massive losses that the companies were making and their valuation was in millions, which was insanity. Very recently, there was a company that launched its IPO. It is also making massive losses, but the valuation is in billions, right? Type out which company I'm talking about. So the point I'm trying to tell you is that the demand of a stock goes up depending on the growth rate. If people believe that, hey, this company will grow for whatever reasons, right? There is no hidden leg to it. If just people believe that, hey, this company is going to grow, the demand goes up and the stock price goes up. Okay, this is a very, very important point for you to understand because rest of the video hinges upon this point. So in case you have not understood these 2 points, please rewind and watch it again. Very, very important fundamental concepts that you need to pick up. So this brings us to point number 3, which is that ITC equals to growth uncertainty, right? And there are 2 reasons why I'm saying it, and I'll show you all the charts and graphs and data here, right? Very, very interesting discussion. Please watch it. This will help you understand stock markets better and how to do fundamental analysis. So number 1, you need to understand how ITC is making its money, right? Where is it exactly making its money from, right? So this was a very interesting, so I'll put up a couple of charts and you can take a look and I'll read it with you. Now here is the segmental revenue makeup. So this chart is from FinShots. Now if 100 rupees are coming to ITC, then how is ITC making its money? From what specific business verticals? So it's approximately making 44 rupees from its cigarette vertical, right? So 44 rupees come from cigarette, 26 rupees are coming from FMCG, 12 are coming from agri-business, 13 are coming from paper boards and others, and a very little revenue, approximately 4 rupees is coming from hotels, right? Now you might say that, Akshat, you know what, these 2 segments look like very promising, right? FMCG and cigarettes. But please note that these are revenues, right? So revenues are what? Revenues are the total cash that you are making, that ITC is making. This is not the profit, right? So you need to also take a look at the profit numbers. So let me show you that chart as well. Now this is where things get very interesting. Now ITC segment wise profit, if you take a look at it, that almost 85% of its profit comes from one segment alone, which is cigarette, right? So now you might say that, hey Akshat, you know what, we were trying to estimate the growth, right? So which is the most important vertical for estimating this growth? It is the cigarette business, right? So because 85% of the entire money that ITC makes actually comes from the cigarette business. Now, which is the second most important business line for ITC? You might say paper boards and packaging, because 7% profits are coming from there. True, but according to me, the second most important category is FMCG, because the massive revenues are coming from here, and I'll have a separate discussion on this subsequently in the video. But majority of the revenues after cigarettes come from FMCG. Again, FMCG is a very, very important growth driver for ITC. So bottom line, this is what I want you to remember, that number 1, if people believe that the cigarette business will grow for ITC, ITC stock will become a rocket and it will go like this. Or if people believe that the FMCG business of ITC will grow like this, it will again become a rocket. Right? If the answer to both of these equations is a no, then ITC stock will stay like this and it might even come down. So that is the simple analysis here, and let me give you very quick inputs on my take on the cigarette business, and number 2, FMCG business for ITC. Now, my take on the cigarette business is very simple, that cigarette business is something that is very government dependent. Now, you might have seen that ITC stock moves massively during the budget season. The reason is because government can impose a 10% tax, 20% tax, whatever they feel like they will impose, and suddenly the ITC's dependence on cigarette business is so high that the ITC stock moves with what the government says, because government can put in taxation. They can incorporate sin tax and whatnot, right? So it becomes a problem. Number 2, problem with the cigarette business is that this is a sunset industry, right? Sunset industry means that there are certain industries, for example, fintech, education, EV sector. These are sunrise industries. These industries are growing, right? Like this. There are certain sunset industries. So one such sunset industry is a cigarette business. Why? Because people are getting more and more health conscious. People are having less discretionary income to buy expensive cigarettes, the area in which ITC operates. So to cut the long story short, right? the cigarette business is something that is not very growth oriented, right? Growth oriented, right? And as we discussed earlier, that for a stock price to go up, what needs to happen? People need to believe that the stock will grow, right? So the growth is not coming from here at least, right? Therefore, the ITC management has been making a conscious choice to diversify its business, right? What is the primary area in which they are diversifying? They are diversifying to FMCG. So what indicates that? This indicates that 26% of revenues for ITC come from FMCG, right? This is FMCG, right? Now, what do you observe? That 26% revenues come from here, but the profit share is so less from FMCG. What does that indicate? It indicates that right now ITC is not operating the FMCG business in a very effective manner. I'll say that again, that because the revenues are 26%, but the contribution to profit is very less from FMCG business, it means that yes, ITC is selling a lot of FMCG stuff, but they are not doing an efficient job. So they are losing a lot of money in terms of expenses, right? This is where I disagree with many of the finance YouTubers, because I feel that ITC can actually bump up its profit margins from the FMCG domain. And I'll explain you why. So this is a chart in front of you, and you will see that the margins, the last column that you see, the margins have been constantly going up for ITC in the FMCG space. When it started out, its margin was, they were running a loss of 10%. Now it's running at a profit of 2.5%. So the margins have been increasing. That's one. The second point that you need to know about FMCG business for ITC is that ITC's FMCG business is not very old. When we compare ITC's FMCG business is selling soaps, shampoos, and bunch of these household products. So if we compare ITC's FMCG business with HUL, Dabur, Nestle, these companies, Dabur, Nestle, HUL, they have been very old and their brands have been very old. So therefore their profitability increase. Why? Because, for example, if you would have bought Dove shampoo or Dove soap back 5 years ago, the prices now have grown steadily for that product. In FMCG, it's a branding game. Dove you will buy at a higher price and the company will keep on increasing the price of that soap. Why? Because Dove as a brand is getting more and more prominence. So as FMCG brands get older, their profitability also increase. This is what it can be studied from this chart as well, that the profit margins for ITC's FMCG business has been growing and it would continue to grow as the brand itself become more and more prominent and gain a household name. The second point which you would not have imagined is that FMCG industry itself is changing massively. Right? What is happening is that there are a lot of retail players that have entered the space. For example, Grofers is there, Reliance Retail, Reliance Mart, D-Mart, so many of these sub-brands have come into the picture. Now what happens is that there is something called as distribution, right? So let me explain that. So the way distribution happens is this, right? For example, let's say that if ITC has to sell you bingo chips, right? How are they going to get it to you, right? They are going to manufacture this, then they are going to send it out to like their local distribution hubs, right? Then these are going to sell it to like small retailers, right? So all these kirana shop that you see, and eventually you are going to buy it from here, right? So this is called as a distribution network. Now what is happening is that with the advent of D-Mart, right? With Grofers, Reliance, right? What is going to happen here? They are going to take away business from these people, right? These super stores will come into the picture. What are they going to do? They are going to launch their own products. You might have observed this, that even small supermarts, they replace all these big brand products like chips with their own brands. So have you observed this? Do type it out in the comment box. So the bottom line is that this industry is growing massively and they are eating into the business of these small retailers. This leads to a lot of uncertainty for ITC. Now it's not like as if that, Reliance Mart or D-Mart will come and they will take all the business away from ITC. No, that is not going to happen. In fact, ITC has one of the most extensive distribution networks in India. Its products are available at 4.3 million of the estimated 8 million retail stores in India. Almost 50% stores in India, more than 50% stores in India sell ITC products, right? So there is a massive lead time that ITC has created, and it's not as if that this distribution network will fall apart. But with the advent of these new age companies or these sunrise industries or this new trend in the distribution system, of course, that is going to impact ITC's business to a certain extent. But the point to be noted is that, hey, again, this gives me less incentive to bet on ITC's growth, because I know that, you know what, this sunrise industry is coming up where Mukesh Ambani, Radhakrishnan Dhamani, people like these are entering and making this retail game really big. This brings me to the fourth point about dividends. I'll very quickly touch upon it. So when a company gives out a lot of dividends, it indicates that the company does not know what to do with that money. Let me explain it in a very simple manner, that if ITC is making 100 rupees, that 100 rupees is coming into ITC's account. Right? Now, if ITC does not know that, hey, where should I invest this 100 rupees? Should I build a new brand? Should I start a new distribution center? It is not very sure. It will take out that money and give it to investors, right? So that indicates that ITC so far has not been able to figure out what to do with all the cash flow that is happening. It is trying to build its FMCG business. The growth itself from their end has been slow. So as it accelerates and starts focusing more on the FMCG business, the growth rate might improve and people might start betting more extensively on ITC stock. So fifth and final point, what am I going to do as an investor? So first and foremost, I understand that ITC is a very sound stock. It is having a growth game problem, but it might improve given the fundamentals of the FMCG business. Finally, what am I going to do? How am I going to make money on this? I will play resistance and support game on ITC, and this is what you should also do. So let me explain this in a very simple terms by looking at the charts and graphs, right? So for me, ITC is literally a risk-free stock, so to say, right? It's paying high dividends. So I'm anyways making a lot of dividends. For example, you can check that, hey, the stock is making good dividends. Its returns are better than FD. So all good things happening here, right? Now, what am I going to do? So essentially, I'm going to play a resistance and support game. So very quickly explaining what resistance and support is, that this is the resistance, right? And this is the support level, right? So support level is where the stock touches and it bounces back, right? So roughly this is the support level. So you can check that, hey, approximately at 200 levels is where the support for ITC stock has been for the last 1 year. And where is the resistance level? So the resistance level is roughly, now resistance is a point where the stock touches and it comes down back, right? So the highest trading level has been 233, but this is not the resistance level per se, right? Resistance would be somewhere here, right? At 218, 290. So what am I going to do, right? On this stock. So I'm going to trade in this 220-ish range, right? If the stock touches this line, I'm going to buy it. And if the stock touches this line, I'm going to sell it, right? So that way I'm making money in this domain. That's one. That's my short-term play. Number two, what am I going to do in the long term? Long term, I do see the stock going up. It's anyways paying me dividend. So there will be like 50-60% of the capital that I've invested in ITC. I will not play any game with it. I will stay put in the long term, right? I will anyways get like 5-7% dividend on this, right? And if the stock goes up, it goes up. If it doesn't go up, so be it. I'm anyways making 7% return on this. So it looks to me like a safe bet, and this is the strategy that I'm going to follow. I hope you enjoyed the video. Please give it a thumbs up. It would mean a lot to me, and I will see you the next time.